The Inflation Reduction Act of 2022 passed the Senate this past Sunday. What does it mean for investors? Let's start the countdown and find out. Welcome back to the InvestorPlace Launchpad, where we explore trending investment ideas and try to rocket them to the moon. I'm head of Mission Control, Aaron Davis, and it seems like Washington is on a roll, as last week we looked at the passing of the CHIPS Act. This week we're looking at the ramifications of the passing of H.R. 5376, or the Inflation Reduction Act of 2022, and what it means for investors. As always, before we dive in, we'd love to continue to grow our channel here at InvestorPlace, so feel free to hit that like and subscribe button and smash that notification bell to stay up to date with us here at the Launchpad. With all of that out of the way, let's examine who some of the winners and losers are with the passing of the Inflation Reduction Act. With strong support from the Biden administration, the passage of H.R. 5376, the Inflation Reduction Act of 2022, serves as legislation that would lower healthcare, prescription drug and energy costs, invest in energy security, and make our tax code fairer, all while fighting inflation and reducing the deficit. At a glance, this legislation aims to lower healthcare costs, invest in alternative energy, as well as having the largest and most profitable companies pay a portion of federal income tax. Though this marks one of the biggest pieces of legislation to pass under the Biden administration, the changes will roll out gradually, according to CNBC. Even the biggest provision, which targets corporations making over $1 billion a year, will see these effects take place over the next 10 years. Additionally, the healthcare reforms will also be a gradual change, with only certain drugs on the table for price negotiation and new drugs not subject to price negotiation for 9 to 13 years after market introduction. CNBC reports that corporations and drug companies are losers of the bill, but there are certainly winners as well, specifically in the alternative energy sectors like EVs, solar, and other renewables. The bill offers an extension of the $7,500 tax credit for the purchase of a new EV and a $4,000 credit for the buying of a used EV, though this does come with a few stipulations. The first being that the car must cost less than $55,000, with van and truck credits being for purchases under $80,000, and batteries must have 40% of the components manufactured in the United States. Ultimately, though, it seems like alternative energy and EVs are the clear winners, and that these sectors may see substantial gains in the coming months and years. While it may seem like Tesla, the king of EVs, would benefit from Sunday's bill passing, despite a healthy rally last week, the stock ended down on Friday. With Tesla already past its $200,000 limit in tax credits, its only vehicle close to being eligible for a credit being the Model 3, the bill does little to excite the company directly. However, continuing the trend of alternative energy winners, company CEO Elon Musk had some interesting words to contribute during the company's recent earnings call, where he once again highlighted the coming demand for EVs and the impact it will have in lithium mining, the core component in EV lithium-ion batteries. Musk stated, "It is basically like minting money right now. There's like software margins in lithium processing right now. So I would really like to encourage, once again, entrepreneurs to enter the lithium refining business. You can't lose." While the infrastructure bill may not contribute to company growth like other EV makers, last week saw numerous headlines that should further position Tesla as a leader in the EV industry. First up, Tesla stock received approval from shareholders for a 3-for-1 stock split, which may encourage new shareholders to purchase at a lower price. Musk also stated on his earnings call that he believes we've passed peak inflation. Tesla Model Y is on track to be the world's best-selling car, with ramping up of production in both Texas and Berlin's gigafactories. Tesla's Cybertruck is now expected to be more expensive, but is, quote, one hell of a product, according to Musk. And finally, EV credits could encourage new consumers into the EV market if Tesla can release an EV under the $55,000 price point. In addition to the EV industry, alternative energy is also a clear winner of the Inflation Reduction Act. What plays might investors consider to take advantage? In anticipation of clean energy's rapid move forward, IP contributor Muslim Farouk looked at 7 clean energy stocks under $5 to add to your buy list. Farouk's thesis builds on the fact that clean energy has been growing at a fast pace over the past decade due to the rising adoption of wind, solar, and other renewable energy sources. For the full breakdown, you can head on over to InvestorPlace.com, but Farouk suggests the following. Ocean Power Technologies partnership with Sea Trepid could scale up business at a rapid pace. Broadwind revenue growth is impressive and is likely to be even better once the headwinds in its wind energy segment fade away. Enercon Solar International, if it can successfully get its sun and hydrogen plant up and running, it could be generating a healthy income stream down the line. Solar Integrated Roofing, ability to acquire its competition, will continue to expand its market share. Fuel Cell Energy, massive market opportunity, and recent results are just scratching the surface. Orbital Energy Group acquisitions from last year have resulted in over triple-digit increase in revenue growth. And finally, Fuel Tech operational expenses are dropping in line with consistent improvement in sales growth. The stock picks on this list consist of solar, wind, storage, and even oceanic energy plays. Ocean Power Technologies' proprietary systems produce renewable energy by harnessing ocean waves in Europe, Australia, and the Americas. Its PB3 power buoy system is essentially an uninterruptible power supply that can be used to generate electricity in remote offshore locations and can consistently recharge itself by storing energy from waves. The Inflation Reduction Act will certainly have an impact on many investments moving forward. Some may not be felt immediately, but ultimately begs the question, what do you think are the best plays moving forward? Are tax credit price points for EVs too low? Will clean energy be the future winner for investors? Is taxing corporations going to affect retail portfolios? We'd love to hear your thoughts in the comments section below. Well, that's all we have for the Launchpad this week. If you'd like more insights like this and Muslim Farouk's full breakdown of 7 clean energy stocks under $5 to add to your buy list, head on over to InvestorPlace.com where we release articles daily. And as always, check back with us here at the Launchpad where we will continue to look for trends like the Inflation Reduction Act. And as always, try to shoot for the moon.